Good morning, everyone. It is Thursday, the 10th of September 2020. Hope you're all doing well out there. Just time for another quick currency update. Today we will be focusing on the pound versus the euro, and let's jump straight into it. It's obviously been quite a volatile year. I'm sure most of us can't wait to get 2020 behind us, and for good reason too. So at the beginning of the year, we had the coronavirus, and we can see that sterling lost 13% between the middle of February to the middle of March. We then did reach the bottom of our 4-year channel, and we rallied about 9.5% up to the 115 level. Since then, we've just started to sort of consolidate and drop in stepping style down, so from 113 down to 111 down to 109. And over the course of the previous month, however, we did have a decent rally from the 109 level all the way up to just shy of 113. We can see we were operating in a decent ascending channel, and we were starting to think perhaps things had shifted for the pound. Unfortunately, however, at the back end of last week, we saw that we got rejected from the top of our channel, and coming into this week, approaching the 8th round of Brexit talks, the market completely collapsed and broke below this ascending channel. We fell down to the 110 support area. We actually broke below yesterday and went as low as 109.51, and today we have just been sort of hovering around this 110 level. Where do we go from here? We are actually minded that sterling drops further. The reason for that is because the UK and EU negotiators still are, having issues in terms of agreeing on state aid, fisheries, and the Northern Ireland border. And not to mention the chatter that the UK was drawing up legislation to actually renege on the withdrawal agreement. So obviously there is still some bad blood between the UK and the EU, and we think the probability of a no deal has risen, and we expect to see more of a risk-off appetite from investors moving forward, and therefore we do expect this 110 level to be broken to the downside. The first target for exporters who are looking to repatriate euros or possibly lock in profit margins would be around the 109 level, and then breaking down lower, we would probably have a secondary target at around 107.50, and lower than that around the 106 level. So that's our outlook at the moment. Obviously, if something miraculous does happen, then we would expect sentiment to shift in favor of sterling, and we would expect to see the pound strengthen. Initial target would probably be back up to 113 and then at 115, and following that, hopefully we can get back up to the top of our 4-year range, which will be around 120. As you can see here, if I zoom out onto this weekly chart, so we've just been consolidating sideways for the previous 4 years, bumping our head on 115 also, and finding support at 110. So those are your key levels: 120, 115, 110, and sort of 107.50 to 106 ish to keep an eye on. But as I said, at the moment we are slightly more leaning towards the pound depreciating. So 110 is probably not the worst price for importers at the moment, if you consider it could be significantly worse over the coming months if we don't actually secure a deal. And obviously let's bear in mind that Boris Johnson has a self-imposed deadline of the 15th of October. So these issues, married with the time constraints, lead us to believe that there will be a sell-off in the pound. I think we'll leave it there for today, guys. If you've got any questions, feel free to drop me a comment below, and I will do my best to get back to you as quickly as I can. Thanks a lot. Take care.